Welcome back to the channel. We're still in the earnings season, but Russia invaded Ukraine in the earlier hours of today. That is the main headline around the world, and markets are down all over the world, at least in major European countries and the United States and Asia. It's affecting equity, interest rate, yield all around the world. Back to the earnings season. We're in earnings season. Home Depot and Lowe'S both declared their earnings, even though their stock price has been affected by the invasion of Ukraine by Russia. Home Depot and Lowe'S, they both declared their earnings. They beat earnings and revenue. Home Depot revenue, it's 35.7 billion. Estimated was 34.8. So it actually beat the revenue. The EPS is actually $3.21 versus $3.18 that was estimated. So, and for your information, the two of them are, like competitors are in the same industry. Lowe'S did buyback of about 13.1 billion last year, while Home Depot did about 14.1 billion buyback of its own share last year. For Lowe'S, the revenue is actually 21.3 billion versus 20.9 billion estimated. The EPS is $1.75 versus $1.70, and the price is actually up by 3.5%. That of Home Depot, the price was up for about 2%. Both of these stocks are giant in the capacity in the same sector. Both of these companies are doing well in their own capacity. We will have a look at their balance sheet. We will have a look at their cash flow. Let us see which one is more liquid, or which one is taking more liability than the other one. We can also do total liability to free cash flow to see which of this company can actually pay back their debt in the shortest time possible if they were asked to pay with whatever amount they have in their cash flow. Cash flow in company's account is very, very important. It tells you how liquidity the company is, and if they were asked to pay back their debt, how long will it take them. So we will have a look at their balance sheet, cash flow, and income statement. We will also have a look at their technical details to see if we can get any information from the price action, even though all stocks are trending down because of the Ukraine and Russia conflict. But however, we will still do the analysis to see on the balance sheet. The balance sheet is not affected by Ukraine at the moment, but the technical chart may be affected. But we will have a look at both of them.
This is before hours. The market is short now. Don't forget, what you'll be seeing here is already affected by the Ukraine and Russia invasion. Now look at the price as at close of yesterday, 23rd of February, was 308. It lost about $7, which is about 2.4%. Now, the market value is 330 billion. Shares outstanding is 1.04 billion. The EPS 15.5. The PE ratio is 19.88. Dividend yield is $2.14%. They are paying dividend. Home Depot is paying dividend. Let's have a look at its financials. We are looking at the income statement starting from 2017, 94.6 billion, 100.9 billion. You can see that this is a steady growth. 2021, 132.11 billion. Let's have a look at the balance sheet for Home Depot. The balance sheet for Home Depot, what I'm interested in on the balance sheet is the total liability. Total liability for Home Depot. And this is where we see the total liability. Under the current liabilities, we see total liability. Total liability from 38 to 38.6, 43. The liability is increasing year by year. The last one is for 2021 is 67.28 billion. You cannot say whether it's too much or too less or whatever, you need to compare it to the cash flow. So let's have a look at their cash flow. Let's see how liquidity they have in their cash flow. So we go to their cash flow statement. This is their cash flow statement. Under the cash flow statement, I'm interested in the free cash flow, total free cash flow, to know how liquidity they have and if they were asked to pay their debt, their liability from their current free cash flow. You know, so their free cash flow is 16.3 billion, which is a lot. I mean, it's a very buoyant company. So if you have 16.3 billion that you can use for absolutely anything, but look at the very important thing. It actually grew 48.2% from 2020. This is that of the last Q4 2021. So you see, this company is growing and they have a lot of liquidity. So let's have a look. Um, we would have a look at the technical chart on Momo, and also I will do the exercise of total liability to free cash flow with all this information. I will input it on the Excel sheet so you see the two that we're comparing, Home Depot and Lowe. This is technical chart, but you can see this is not really, this is very professional. I will take you on Momo where you will see more details. Now let's have a look at Lowe. Okay, so this is Louis. Louis is currently $208. It actually closed last night as 215. It has been affected by the Ukraine and Russia, conflict as well. So it has lost about $6, which is about 2.98%. What you need to see, the other fundamental information is this is 144 billion market cap, not not equal to Home Depot, but they're in the same. They're providing the same kind of services and products, so we can compare them. Now the EPS here is $11.52. The PE ratio is 18.64. So I will input all these details on the Excel sheet as I mentioned earlier. So let's have a look at the income statement. 2017, 65 billion, 2018, 68 billion. This company is also growing too steadily, consistently. Look at the chart. Look at the graph. Consistently. Now let's have a look at the balance sheet. Let's see their total liability. That's the figure we need. But if you have time, you can go over. This company is steadily growing. But let's go over to the total liability. So we see their total liability to see if they are incurring so much debt, if compared to their cash flow. So we say total liability. The total liability is 46.85 billion. 46.85 billion. You cannot say whether it is too much or it's too low. You need to compare it to the cash flow in their free cash flow statement. So let's have a look at the cash flow statement. I want to see their total free cash flow to see how liquidity they have. If they were asked to pay for their debt, how long will it take them with the current amount in their free cash flow? So we're looking at the free cash flow is here is 9.26 billion compared to 42 something. So you see, but we will do the exercise, then you will see all this information on the Excel sheet. You can also download the Excel sheet if you want it. I will put the link there. So let's go on the Excel sheet. Then we will now look at the technical details on Momo. The Excel sheet I'm talking about, this is for to calculate the total liability to free cash flow. This exercise is to check their total liability ratio to free cash flow. That is to say, if they were to pay their debt with the amount of free cash flow they have currently in their account, how long will it take them? Now, I have copied all this information from, let me confirm to you so you can, for Home Depot, free cash flow, current free cash flow is 16.38. So if you look here, 16.38, already copied it here. For Lowe, it is 9.26 billion. So you can see their free cash flow is 9.26 billion. So I copied all the information, including the PE ratio, and all that. These are the information and the price. The market cap is 144.58 billion. For Home Depot is 330.16 billion. So I've copied all this information. So what it means that, yeah, if you look at it now, it means that for Home Depot, it will take them 4 years to pay their total debt with the amount of free cash flow they have. For Lowe, coincidentally, it will take them just about 5 years to pay all their debt with the amount they have in the amount of their free cash flow. It just tells you that both of them are not taking excessive debt more than what they can afford to pay in few years. That is what this exercise is all about. Please, guys, do your own valuation. Use your own metric to know whether a company is good for you or not. Let's have a look at the technical details on Momo chart. We are looking at Lowe'S companies on a weekly chart. You can see that this is an upward trending stock. It started coming down here for the in January. This stock just looked like what has happened on S&P 500 is testing this low. It's currently on a 50-day moving average. Currently on a 50-day moving average. The 50-day moving average is actually sitting at support. I just try to draw that so you can see. It's sitting as a support here, as you can see. But actually, this stock is trending upward. Can we just try to do this and see if it will work? Okay, good, good. Also, from here, okay, up my mouse will not malfunction. Okay. Oh, guys. Okay, good. Yeah. So you can see that. Now, can we look at it on the daily chart? I think I already drew that on it. See, these are the level of support, and this support can stand as resistance here. You can see on a daily chart, it's sitting on the 200-day moving average as support. If this 200 this support breaks, then we are looking at deep down in correction for this stock because it's actually an upward trend. It is this correction that has brought it down and the effect of Russian invading Ukraine. However, what we can see here, uh, this is strong bearish movement here. This is a strong bearish candle, and it doesn't look like by the time the market opened, this might break this support because the momentum is definitely on the bearish movement. The bearish movement has strong momentum. Let's have a look at Home Depot. Home Depot. Home Depot. Okay, very similar. On the Home Depot, I actually do this support, resistance, support, and but what you need to see is here it has broken the 200-day moving average here down. This is going for that down. And look at the candles. This looks like an anchor candle. In fact, it actually gap down here. So this definitely has a momentum, has a bearish momentum. Let's have a look at weekly chart for Home Depot. I already do this. You see, this was an upward movement till the beginning of um, um, January. See, then just like every other stock that was trending down, because of correction, but this is further down the correction now. So when the market opened, I'm not confident yet because in fact you can already see that the market is 297. So definitely momentum is on the bearish side. I don't see anything, any magic, that's coming up to upon this momentum for now.
We have looked at the balance sheet. We have done the total liability to free cash flow ratio. You have seen the two equal stock. This is time to do your own valuation to see if any of these stocks is good for your own portfolio. They are value stock. We have done our valuation at Elite Pro Investment. Do your own valuation. Do not just buy stock or add stock to your position because somebody said that they've done theirs on a YouTube. Be sure that they are good for you. Thank you for watching this channel. Thank you for following up on our progress. We will continue to create content that will support your investment journey. Thank you. Please call again.